not only are price falls continuous, but they are accelerating. And this is the fastest pace that we've seen in falls since the GFC, which incidentally was also off the back of some rate rises. And aside from that, it's really the fastest declines we've seen since the 1980s, which might not be much of a surprise. It wasn't long ago we were talking about this being the longest and fastest upswing since the 1980s. So really what we're seeing in the property market is a reflection of some of the extremities in interest rates, both at their record low levels through the pandemic and the strong increases we've seen over the past few months.
Now, you also found that it was the first fall in overall regional prices since 2020. So some coming off of that impact of people working from home and moving to the regions because they were cheaper.
Absolutely. I mean, regional Australia saw a total upswing that was around 45% compared to a 25% upswing in capital city home values. But what this latest data shows us is that regional Australia is also not immune to higher interest rates, with affordability constraints now seeing sharper falls across areas like Newcastle in the Hunter Valley, the Illawarra region, and some of those really popular regional centres like Geelong as well.
Now, how big do you think the falls will be? We've got some property analysts saying it could be between 10 to 20%.
I think when you hear those kinds of numbers, it might pertain more to Sydney and Melbourne, where you do tend to see more volatility. Certainly, as long as rates are going up, we can expect property prices to fall. And a lot of forecasters aren't expecting rates to come off the boil until 2023 or even 2024. So it might not be until we see a plateau or a decline in the cash rate that we start to see a bit of a floor in the housing market.
Now, you are expecting another rise in interest rates tomorrow by the Reserve Bank?
I'd imagine so. I mean, June's inflation figures showed that that inflation rate is still rocketing compared to that 2 to 3% target that they're aiming for. So core inflation above 4%. And with the RBA in inflation fighting mode, you can only really expect it to go north. I mean, remember that falling property prices and higher mortgage expenses are all part of the deflationary plan for Australia. If people are spending more on their mortgage, they're spending less elsewhere. And we're also not getting into as much housing debt because debt costs more. So it does all seem to be a way in which that deflationary effect is disseminated through a falling property market.